What's up, investors? It's the Russian dude, and it looks like that there is a relatively good possibility that the Federal Reserve might reverse its pivot in 2025. What it means, original pivot is basically whenever they cut the rates, what we saw in the last quarter of 2024, the total decrease was amounted to 1 whole entire percent, and reversing the pivot is just a very extraordinary, unnecessarily long way of saying that they might start either holding or again increasing the rates once again. And so here is the reason why. The most recent employment data, specifically the unemployment rate, came to us at 4.1%, even though the expectations were 4.2%. And then US non-farm payrolls came to us at 256,000, even though the expectations were just way lower, 164,000. These are obviously the signs of a very good, relatively strong labor market, which is one of the direct consequences which will lead to an accelerated inflation. Because if you remember, two main criteria for Jerome Powell in order to start cutting rates was also obviously to see the labor market not to be so strong. He did not want to see too many employed, he wanted to be in unemployment a little bit higher than average, even though obviously in the future they would need to bring this number down to the average number of approximately 2% or so. Long story short, the reason for this is that yes, if there is more people employed, if there is more economically active people in the country, they increase their spendings, they boost the economy, which is a good thing, but they also increase the inflation. As you can see, once again, according to this employment statistics, jobs data, non-farm payrolls, we are in a very pretty strong labor market right now, which once again could be a cause for concern for Jerome Powell. As a result, he might be thinking whether to continue cutting the rates as he originally thought in 2025. Maybe right now the pivot will be reversed, which basically means they might need to increase the rates once again, at least maybe once or twice, just to see how the inflation reacts. Because as of right now, the inflation is already re-accelerating at a much faster and at much sooner pace than originally anticipated. Even some major financial corporations in America, such as for example Bank of America, Goldman Sachs and JP Morgan, they also think that this pivot is either about to be over or it will be at least suspended. For example, Goldman Sachs, they originally thought that it will be approximately 3 rate cuts in 2025, and they are the ones who are most conservative. Now they expect only 2 rate cuts. JP Morgan then thinks that there is not going to be any single rate cut in 2025. They think that the Fed pivot will just be paused completely, at least until there is more clarity in the jobs data or another economical data. But then we have Bank of America, who thinks that the cycle of cutting rates already is over, so the next decision by the Federal Reserve can only be the one and only, which is to once again start increasing the rates. As you can see, the sentiment is shifting on the markets, people start to be more concerned about what's happening and what is the future decisions of the Federal Reserve and specifically Jerome Powell would be, and as always he will just most likely need more data in order to make decisions. The expectations is that yes, maybe there will not be rate cuts, maybe there will be maximum just 1 rate cut. As you can see, some people even expect that the rates will go up once again. In either way, the next decision, unless it is the decision to just keep the rate where they are, the next decision will be very curious, might be very shocking for the stock market, for the markets in general. Let's see. As for now, this is all the information I have for you. If you enjoyed today's episode, please subscribe to my channel for more videos like this. Thanks so much for watching. See you next time.